It won't be too long before it's that not-so-favorite time of year again. I'm talking, of course, about tax filing time. I know that many people are looking forward to this year's filing deadline of Monday, April 15th, with the same sense of foreboding as they would a visit from, I'll let you insert your own punchline here. But even if you're dreading doing your taxes, it's important to your financial health that you take care of this obligation. Here are 3 tips to help you do that so you pay whatever you owe, but not a penny more. First, get organized now. Start pulling together the material you'll need. W-2s, or the wage and tax statements you get from employers, 1099s that report dividends and interest from banks and investment firms, mortgage interest statements, and receipts and such to back up any deductions you may plan to take. If you're unsure what you'll need, you can print out this tax preparation checklist that's available on HR Block's site. Second, make sure you're not missing out on any deductions. You're probably familiar with the deductions for mortgage interest, charitable contributions, and the like. But even well-known tax breaks may have wrinkles you may not know about. For example, if you forgot to contribute to an IRA in 2012, you may still be able to contribute up to $5,000, $6,000 if you're 50 or older, to an IRA for the 2012 tax year, as long as you do so by the April 15th filing deadline. This calculator can show you how much you're eligible to contribute. Depending on your income, you may also be able to take a tax credit of up to $1,000, $2,000 for joint filers, for contributions to an IRA or employer-sponsored savings plan. What's more, there are many deductions and credits people are eligible for but simply overlook, ranging from ones for state sales taxes, student loan interest, and the child care tax credit, to name a few. To make sure you're not missing out on deductions or credits, check out this list of the most 10 overlooked deductions that appears on the TurboTax site. Third, use this year's return as a tool for reducing next year's taxes. To take advantage of some deductions, the amount you deduct must exceed a certain percentage of income, 7.5% of adjusted gross income in the case of medical expenses. If you find that you're falling short of such thresholds, planning ahead may allow you to group deductions into 1 year rather than taking them over the course of 2 years. Along the same lines, if you find yourself reporting lots of short-term capital gains distributions from mutual funds that are taxed at ordinary income rates, you may consider rejiggering your portfolio to include more tax-efficient index funds, ETFs, or tax-managed funds. One final note. If you really feel you can't make the April 15th deadline, you can get an automatic 6-month extension by filing Form 4868 by mail or online. But this is a filing extension, not an extension of time to pay. So to avoid penalties and interest, make an accurate estimate of how much tax you owe and be sure to pay that amount by April 15th. Taxes are stressful enough. Why make things worse by making the process longer than it has to be?